Hello there, my friends. Chris Marcus here with you for the Miles Franklin channel. I want to wish everyone a happy new year as we kick off 2019. And also today, a quick video about really comparing the risks of cash versus gold. Because one of the questions that I get a lot from the readers and viewers is really, is it safe to invest cash into gold? How much precious metals should one have? And really just comparing the risks of the two, because I think that gets missed a lot, certainly in the mainstream. Now, full disclaimer, obviously everyone's situation is different, so I can't give personalized financial advice in this video, but just something to leave you to think about, where people often view gold or precious metals as the risky asset and certainly priced in dollars. The price does fluctuate quite a bit. But when I think about the long term of, if I took $10,000 and had to leave it somewhere for the next 10 years, would I rather have cash or gold? Personally, I'd rather have silver over those other two, but gold or silver, I know many view the metals as risky, yet what I don't think is properly priced in is the risk that you have of just holding cash. Obviously, in the channel and in the Miles Franklin blog, we talk a lot about how much money has been printed. If you look at what the Fed has done over the past decade, they've quadrupled their monetary base. They've printed money to keep interest rates low. So the dollars, whether it's being priced in on a real-time basis by the market, how much the dollar has actually been devalued, I would say not. And I would say there's a lot of catching up to do. But in either case, you see one asset where the supply is being increased, and often what people typically look at as the safest possible thing is to hold cash in a bank, which I would agree theoretically should be a safe thing, and in a more sound money economy that would be. Yet we have negative interest rates in Europe and Japan. I would argue that if you had a true inflation rate, the real rate of return is negative here in the US. So essentially, you're putting $100 in a bank that is likely to be able to buy less a year from now due to the devaluation of the currency. And then because you're getting a negative interest rate, in a best case, you're getting maybe 98 or 99. I mean, you're getting a guaranteed loss when you get a negative interest rate with cash in a bank. And of course, also worth factoring in is the risks that many of these banks currently have. We see what's going on with Deutsche Bank. I personally don't believe the banking sector in the US is much stronger either, despite Steve Mnuchin's claim last week that there's adequate liquidity. Yet, look at what's happening as rates go up. That's pressure on the real estate market. Banks own a lot of these real estate assets, the real estate derivatives, all the things that nobody wanted to buy back in 2009. So the Fed came and printed a lot of money to purchase a lot of assets. You look at programs like the FDIC insurance, which theoretically guarantees up to a certain limit that your savings are safe, yet if these banks lose a lot of money, where's the FDIC going to get that? Remember it being rather underfunded last time. Is more money going to be printed to cover those losses when they occur? So to me, I've always seen cash as the real risk, more so, whereas gold and silver to me has always seemed as a natural safe haven. Again, when you see the prices going down as priced in dollars over the last couple of years, yes, that certainly skews things. But if you're able to look at these things from a long-term perspective, again, markets can remain irrational in the short term. And hey, if you want to call the last 7 years long-term, sure. But looking forward, at least to me, they're great. It's at least, this isn't to say put all of your savings into gold and silver, but rather to point out that there are great risks to holding cash in a bank right now, which doesn't mean you shouldn't hold any cash in the bank. But again, be aware that this idea of dollars as a safe haven, treasury as a safe haven, that if you really want to protect your capital, just throw it in a money market fund. Again, we saw what happened with the money market funds when the system almost broke in 2008. And the only way that it was able to be maintained was through massive amounts of money printing, which again means more dollars in supply. Whenever it's priced properly, we'll see. Again, there's a lot of momentum behind people flocking to dollars and dollar assets. But when you simply look at the fundamentals, certainly great risks in cash, of which gold and silver are the offsetting hedge to that. So something that doesn't get pointed out often, but I thought would be worth sharing. And hopefully you found that helpful. Hit the subscribe button, and I will talk to you again soon. Thanks.